How to create a framework model. Hi guys, my name is Daniel and I will show you how to create a framework model. A framework model is a core model that can be expanded to literally any cash flow implementation, specific to any company. It is built with income statement, balance sheet and cash flow items that are connected into one coherent, fully functional, albeit a simple, modeling and planning model. Once done, you can copy-paste it from one project to another, edit it to a specific situation, connect it with other models, or consolidate it to create business hierarchies. Before you start, make sure you have saved a template import file, which can be downloaded here. It will save you some time. So let me start MYGIDE and take you through the essential steps. This is what we're going to do. The first step is to create a template project. Click on the project icon, add a new project and call it whatever you like. I'm going to call it Template Project. Then go to Model section and create New Model. Let's name it Framework Model. In step 2, we will build an initial statement structure. Go to the Statement section. As you can see, we already have one statement available here. Model Accounts is a built-in statement that shows all accounts that will be created within the model. Let's create our first statement. Click Add New and name it Income Statement. Then again and name it Balance Sheet. The last one for now will be called Cash Flow. Should you wish to reposition any statement, drag and drop it with or without pressing Shift on your keyboard. When Shift is pressed while drag dropping a statement, it is sub-leveled. A misspelled name can be corrected when the edit icon is turned on. As the statements are just boxes that display accounts, what we need to do next is to create the framework model accounts, which we can then allocate to the statements that we created. There are several ways to create accounts in MYGIDE. We will opt for the Accounts Import tool now. Click Import icon in the main toolbar. From the left section list, pick Accounts Import. Browse for an import file and select a model into which we want the accounts from the file to be imported to. In our case, it is the framework model. MYGIDE is able to read several Excel sheets in one go, which is helpful in data imports. This time we select only one sheet named Account Import because that is where the accounts which we wish to import are saved. Check Create Box and open Substitutions. Substitutions allow MYGIDE to replace hashtags with a preferred text or numeric codes, which is very helpful once you run multiple models in one project. This time we settle with code pattern 1100 and name pattern FM. Press Import and close the import window. All accounts are now created in the framework model and are listed in Model Accounts. The next step is to make these accounts appear in the statements where we want them. The first line in the main grid is the built-in filter. Put IS in the column code. MYGIDE filters out all the accounts whose code contains IS. press Edit icon in the Statement section to enable checkboxes. Now select all filtered out accounts, pressing Ctrl+A and check Income Statement checkbox. Do the same with balance sheet and cash flow accounts. So now you have the accounts in the model displayed in statements. The next step is either to make visual formatting for accounts in the statements or adding formulas. Let's go with adding formulas and leave the visual niceties for later. Click Account Management icon in the main toolbar. If you have two screens like we do, then you can move this new window to the second screen. MYGIDE has a nice synchronization engine that automatically selects what you highlight in the main grid into the Account Management Active Account box. For now, we stick to one screen for those that do not have the luxury of two screens. Click this green-blue arrow circle to display the accounts from the active accounts only, or this to show all accounts belonging to the model. Now we are ready to proceed. At first, we will focus on the so-called structure formulas only, which are results and subtotals. In our framework income statement, we will have 5 result accounts and 4 subtotal accounts. In the list of accounts, find OPEX, double-click or drag and drop it into the active accounts section. From the available formulas, pick Subtotal and double-click or drag and drop it to the active formula section. From the list of accounts, select everything from Material to Other OPEX and drag and drop it to the Formula Parameters section. Here, we have the option to set in which period this formula will be used. One attribute of the result and subtotals is that these formulas are the same for the past as well as for the future in the vast majority of calculation situations. MYGIDE knows it, and therefore it automatically suggested and highlighted the entire area. So all you have to do now is to press Save. Here we go, our first formula was applied. We now continue with depreciation. Here is the depreciation. Drag and drop it to the active account section. Select and apply subtotal. Take new assets and existing assets depreciations and drop them in the parameter section and save. The next one is interest expense, where we will create 2 subtotal levels. Take interest expense subtotal and from here just long-term and short-term debt interest. Press Save. Now take long-term debt interest subtotal and from the list we take existing and new interest expense and save. Wonderful. From now on, all these subtotals will always sum up to the amounts of their child accounts across all periods. As you can see, adding formulas is always the same. First, you say to MYGIDE which account you wish to make a formula to be added to by moving it into the active account section. Then you pick a formula. Then the accounts which you wish to enter the formula as parameters. And last, you set a time where the formula will be applied to. Now we can move to result accounts, which are contribution margin, EBITDA, EBIT, earning before tax and net income. In the list of accounts, double-click on contribution margin. Then pick result. From the list of accounts, select revenues and variable cost and drag and drop it into the formula parameters section. In results formula, we may also change the sign to indicate whether we wish to add or subtract any of the calculation parameters. In this case, we change the sign for variable costs to be subtracted in the equation. We now continue with EBITDA, results and contribution margin, and OPEX. We change the sign for OPEX to minus and press save. We do the same with relevant parameters for EBIT, earnings before tax, and net income. And the income statement is done for now. Let's go back to the main grid and test it. Make sure you are in income statement in the annual view for now. To help us understand what types of formulas are applied where, MYGIDE has a nice feature. Click coloured cells icon in the toolbar and pick the cell type view. The grid has now coloured. Green is for the subtotals, blue is for the results. Those in grey are without formulas as of yet. If you enter a number in revenues and variable costs, the contribution margin is calculated. Test other accounts calculations. If you happen to make a mistake with any account or formula, you can fix it easily. Go back to Accounts Management, find the account you wish to update, double-click, highlight formula you wish to edit. Time and parameters relevant for the account and its formula are displayed. Now you can add, replace or delete any parameter or change the sign. Do not forget to press save when you do. Obviously, you can also delete a formula altogether with all the settings and parameters and repeat the process of adding a formula. If everything is all right now, we can move on with the balance sheet. Balance sheet accounts have one key difference compared to income statement or cash flow accounts. They do not sum if you convert them from monthly to quarterly, year-to-date or annual views. They take balance as of date. So, in the account management, we pick the first balance sheet account, which in our case is total assets. You can see here that it already has a formula, sum of the month values, applied to the year-end period. In MYGIDE, every new account is automatically given this formula, which sums up all relevant months when creating quarterly, annual, or other year-to-date type of views. So as I said, this does not apply to balance sheet accounts, so we are going to change it. In MYGIDE, one and the same formula can be assigned to several accounts in one go. Quite handy for our next move. In the Active Account section toolbar, press this. It will initiate multi-account mode. Then select all accounts in the balance sheet statement, or if in the model account statement, all that have BS in their code, and drag and drop them into the Active Account section. Don't worry about possible duplicates. MYGIDE sorts this out automatically. In the formulas, find Get Balance As Of, move it and press Save. Done. The formula was applied to all listed balance sheet accounts and replaced the previous sum of months formula, so there is no need to remove it. Go back to single account mode by pressing this again. Now we can assign result and subtotal formulas to all relevant balance sheet accounts. Most of them are subtotals. We start with total assets. find subtotal and then fixed assets, financial investments, inventory, debtors, cash and other assets. Move and save. Then fixed assets, existing and new. Cash, operating cash and free cash. Total equity, shareholders' equity contribution, retained earnings, and additional capital needs, which is quite an important account as we will learn shortly. Shareholders' equity contribution sums subscribed capital and other equity items. Next will be liabilities with interest-bearing debt, creditors, reserves, other liabilities. Then, interest-bearing debt, which has sub-levels, long-term bank debt and short-term bank debt, with the long-term bank debt broken down further into existing and new. The last account in the balance sheet will be balance sheet check, which is result formula. Returning difference between total assets and total equity and liability. This is a check account and must return 0 at all times, proving that data in the balance sheet and model is correct. Now it's time to look at cash flows. Let's go to Statements section and select Cash Flow Statement. Our cash flows will be created based on an indirect method, which means we will calculate a change in balance sheet accounts between two periods, complemented with income statement and some other auxiliary accounts. Before that, let's identify and set result accounts. The first one is change in working capital. Double-click and find Result, and take change in inventory, in debtors, in creditors, and in operating cash. No need to change the signs. Save. Next is operating cash flow, which sums up EBITDA with change in working capital. Add result formula, and let's find EBITDA first. For that, you have two options. We know that EBITDA appears in income statement, so we can click on it and find it there, or we can always click on All Accounts icon, where all accounts created in the models are stored. Here we are. Should there be a long list, you can always use the filter in the first row. Drag and drop it to Parameters section. Do not double-click it, as this will replace the operating cash flow account with EBITDA in the Active Accounts section. If that happens, go back to Cash Flow Statement, double-click on the operating cash flow account, and go find EBITDA again. The next parameter in this account is change in working capital, so we will sync the list of accounts to see cash flow accounts only and add it to the formula, and save. Let's do the same for free cash flow before CapEx. Here we take everything from operating cash flow to change in reserves and add them, then subtract income tax, which we will find here, once we remove the previously filtered account. Let's sync back the cash flow accounts only, and the next account is free cash flow before financing, which is free cash flow before CapEx minus CapEx plus any income from the asset sale. The last one for now is free cash flows, which is free cash flow before financing, change in short-term and long-term debt, plus change in shareholders' equity, add dividends/other equity contributions. And we also need to include interest expense. Long-term bank increase/repayment are already included, so we will ignore them for now. Change the sign for interest expenses and dividends/other equity contributions. In the next steps, we will introduce two new formulas: cash flows assets accounts and cash flows liabilities accounts. They calculate change between periods. These two formulas are similar, the only difference being the signs assigned, which are different for assets and liabilities. When you increase assets between any two periods, you calculate it as a decrease in cash flow, contrary to liabilities, where it means cash inflow. Let's start with inventory. So double-click. Amongst the formulas we find cash flows assets. Here we are. Let's go to balance sheet and find inventory and drag and drop it to parameters. Good. Now repeat the same for change in debtors, operating cash, change in financial investments and other assets. That's it for the asset side. In the liability spectrum, do the same, save for the formula, which has to be cash flows liabilities, for changing creditors, other liabilities, reserves, short-term debt, long-term debt, and shareholders' equity, of which the underlined account in the balance sheet is shareholders' equity contributions. There are still three accounts in the cash flows that need our attention. Dividends or other equity contributions. This is an account that reconciles movement in retained earnings with net income for a given year. Double-click, find Result, and from the balance sheet take Retained Earnings and do it twice. And from income statement take net income. In this case, we have to adjust not only the signs, but also period. Also, this is the first time we are not going to apply the result formula for the whole period, only for the past. Next will be CapEx. Also result. From the balance sheet, we take fixed assets twice, and from the income statement, we take depreciation and NBV of assets sold. Save. If you wonder why these specific setups, see our video where we explain some formula settings. In a nutshell, it is a standard movement calculation in assets or liabilities, eliminating natural movements that have already been accounted for in the cash flows elsewhere. Last step is adding all the remaining accounts from the income statement. As you noticed, we started cash flow with EBITDA and later included income tax, asset sales, and MBV of assets sold, and interest expense. The remaining items, other income and other expense, which are below EBITDA in the income statement, will be added to non-operating items. Double-click, take result. From the income statement, select these, other expense it to be negative, and press Save. That would be all as far as the core structure formula application is concerned. We are not done yet though. We need the final touch in order to complete the logic of the three-way financial modelling so that a change in any of the entry accounts, which we will take a closer look at later, will be reflected in a flawless cash flow calculation. Still in cash flow statement, find Cash Increase. Double-click and in the formulas go for Increase in Free Cash. Its parameters are Free Cash Flow to A, Additional Capital Decrease to B, and Cash Decrease to C. Next is Cash Decrease. Formula is Decrease in Free Cash, and parameters are Free Cash Flow to A and Free Cash Flow from the balance sheet to B, and this one takes value from the previous period. Be careful here, as this can circular your calculation. Additional Capital Increase. Formula is Increase in Additional Capital, and parameters are Free Cash Flow to A, Additional Capital Decrease to B, and Cash Decrease to C. The last one in the cash flow is Additional Capital Decrease. Formula Decrease in Additional Capital, and parameters Free Cash Flow to A and Additional Capital Needs from the balance sheet to B, also referencing the previous period. Great. The last three accounts to be set up before the grand finale. Go to Balance Sheet. Find Retained Earnings, select, take Result Formula, and add Retained Earnings, previous period, plus Net Income, minus Dividends, both current period. Here we apply the formula only to the future period, assuming that past will be taken from accounting data. Now we link free cash with movement in cash flows. The formula is result, and parameters are free cash from previous period plus cash increase from cash flows minus cash decrease, also from here. We do the same on the liabilities side for additional capital needs. In this case, the parameters are additional capital needs from previous period plus additional capital increase minus additional capital decrease, both from the cash flows. Wonderful! You have created a simple cash flow model, fully integrating past and future income statement, balance sheet, and cash flow statement. Import data from the import file to see if the model is correct. Also, try to add manually values to the future to see if balance sheet check is 0 at all times. If something seems odd, go check this paper with all formulas and settings listed. In the next two videos, we will add selected accounts modeling formulas to make it easier for you to plan your future and show you how to make your group of statements appear the way you like.